Hello, fellow traders. 'Tis I, the Rumpled One, coming to you Monday, December the 16th, the year 2019. Let's talk trading. How to improve your trading. Isn't that why you're watching this video? Hoping maybe, or we watch trading videos or get on forums so you can improve your trading? But let's think about it. What's trading? You select an instrument to trade. It could be a stock, a currency pair, a commodity. Then um, most likely the case, since you're on the internet, you're going to click your mouse on a buy or sell button, right? And you'll probably have a chart up, and it may have some lines on it: horizontal, squiggly, diagonal, vertical. And you're going to make a decision. It could be based on statistics, fundamentals, technicals. But the thing about it is, the thing that makes trading so challenging is that no matter why you click the mouse, when you click the mouse on, and what you chose to click the mouse on, it doesn't matter, because what happens next is out of your hands. So you can chalk it up to making a best guess, a calculated risk. And I think you all know what's coming next. You have to have your risk management in place, because that's part of making a calculated risk. Because when you enter a trade, you're thinking, I believe based on my research that the price is going to move either up or down. So, and in this case, I think it's going to move up. And then in another case, I think it might move down. But this is a calculated risk because I can't control the direction price moves after I enter the trade. But what I can control is how much I am willing to lose on that particular trade if my guess is wrong. And that's right here, how much you're willing to lose per trade. And you have your position size and stop loss in accordance with that risk. So if your trade goes against you, it only goes against you so far, and then you're stopped out. On the other hand, on the money management side, as you're starting to see your profit on that trade increase, you might move that stop loss up. Maybe you move it up to break even plus one. Maybe after you get to a certain point, you take some of the profit, you bank it, and then you maybe use a trailing stop to see how much more of the run you can capture. And these are the things that you can work on to improve your trading. You see, most people will first, they will try a method, and then they'll probably chuck the method, or they'll start tinkering with the method. I've seen it over and over. I see it on my systems that I share on different internet forums. Somebody's always wanting to come in and tinker before they've even used it. I mean, their very first post sometimes is they want to add this or add that. It's amazing. Whereas in most traders' circumstances, if they just worked on what they do in terms of risk management and money management, their trading, their results would probably improve dramatically. Because most of the methods do work to some degree, and a lot of times somebody will hit a lucky streak and sometimes they don't. Or they'll use something that statistically shows over and over again, day after day, that there's a high chance that this trade could work out and you could profit from it, whether it be 1 pip, 10 pips, 100 pips, or more. But most traders aren't willing to stick with a method long enough and work on themselves. Because you see, if you work on yourself, if you get your risk and money management down, if you just do that, I mean, that's one leg. And sometimes you can stand on one leg. Okay. So, you've got you, and you have to have your risk management down to a science, and you have to execute it flawlessly each and every time. Now, of course, fellow traders, always remember these videos that I put out there for educational purposes only, and your results may differ from mine. And that trading, whether it's Forex or stocks or anything else, commodities, is very, very, very risky and you can lose all your money. So, if you're seeking financial advice, trading advice, find yourself an accredited financial professional and get the advice from them. That way, when you lose your money, you know you got the advice from an accredited financial professional rather than some guy you heard on YouTube or read their stuff on the internet. Okay, simple chart here, just 4 lines. We've got today's open, previous day's open, and previous day high and low. And right here, looking at the 4-hour chart, you can see that the dollar yen has moved up about 32 pips from the open. Not bad. Just very simple trade there. So, because the thing is, you can almost do a coin toss if you like, or you can look at the chart, a weekly chart, and go, okay, this week I think price is going up, or this week I think price is going down. And you can trade accordingly. In this case, since the open was below the close, you figure that gap's going to close, so you just go long. And you see there is a 5 pip difference there, 32.27. Then you could have just sat there and moved your stop to break even +1 and go, let's see how far this price can go this week. And right now you'd be up, 30 pips or so. And you can see we're in the upper wick zone of the previous week. Now, if we, 10 pips or so, we're going to be knocking on the door of the previous week's high. And right there, you can see it kind of knocked on the door of the week before. And if it breaks to the upside, hey, there's a lot of clear air up there, right? And if you look, you can see we're only 5 pips below the yearly open. So yesterday, I think we were about 20 or 30 pips when I made the video last night. So you can see we've moved up. We've crossed over the previous day's midpoint too. And once again, we're in the range of the first trading day of the year. We're still putting in the range of the first trading day of the week. And we're still in the range of the first trading day of the month. So right now we're range bound. And you can see here we're starting to clear more opens. We're green for the month now, holding green right now, and we're almost green for the year. And looking at these ranges, you can see here, once again, looking at the those 2 monthly highs, or not monthly highs, but the open trading day for the month highs. And inside bar traders right now, if you took that inside bar trade, you're up about 5 pips. Once again, very simple trade. And we're in the previous day's upper wick zone. We've got the 5-6 pound pairs above 100 on the range today. We just had a weekly H1 highest open right there, which is also the daily highest open since the week and the day are the same. But you can see prices dropping down from there. And I think we mentioned yesterday we took out that pivot already that was just on the other side of the buy zone. So we had the pivot above the open, we had gap down, so there's 2 reasons to have a long bias when price opened yesterday. Rat zone, you can see right here, we switched it now to the pound dollar because the dollar yen is just not giving up the rat zone trades very often anymore. And you can see here we had a red candle close, green candle close, break here to the upside. Also, this is a turn trade here off of a bottom, and prices starting to go back up. There was a nice red rat reversal up here, and you can see green candle close, red candle close, take the break at the low of the red candle. Also a turn trade there. So many ways to get in. Now a turn trade can get you in quicker than a rat reversal trade, but of course, no matter what, you always run the risk that the trade can turn against you. Switching back over to dollar yen, the weekly pivot 109.15. We haven't hit it yet. In fact, we've been moving away from it. And just so you know, the weekly R1 pivot is at 109.87. When we took out the pivot, we missed this pivot. Price action. Price doesn't like staying between the lines. You see two ball at the top, go short at the line, and right now you're about a break even on that trade. And as I mentioned last night, we're probably going to spend a lot of time in the wick zone because the wick zone was about 37 pips. Simple high open low chart. You can see here it failed to maintain that high and crossed back down below. As far as the tick chart, you can see we're at, I guess we're at 2 o'clock New York time right now. I guess some traders are probably coming back in from lunch. Einstein line, there was a little move to the upside. And if you took it, you'd be up, what, a pip, half a pip. And you can see here we're in that weekly, previous week's wick zone right there, upper wick. There's the lower wick. Okay, there was something here. A trader asked me why they can't get spread to appear on their spread dots. I had made a little modification to the indicator, and I haven't sent it out because there was something else I wanted to change on the indicator. The original had selling, waiting, and buying. And then I decided that, that waiting, it just seemed like it put in another level that kind of masked what was going on. So I took out that. And what I need to do is I need to put a switch in there so you can have new way or old way. And so that's why you don't see the spread on your version, but I'll be working on that and probably get that out before the end of the year. Update that to the 2018 folks. Okay, here we go with the range gauge. As you can see here, we've already gone through the open plus half, the minimum ATR and the maximum ATR here. And on the weekly, you can see we've almost hit half the weekly. So that's kind of interesting to happen that quick. But when you look at the range here, average range 140. We have an average range of 45 on the daily. We got 40 right now on the daily. So we're below average by 5 pips. So we're right in the realm. Okay, fellow traders, and there's frequency distribution here, and you can see that range. So just remember, if you want to improve yourself in trading. You know what to work on because it's not what you trade, it's how you trade it. So go out there and drain the banks.